Eric Mwathe.com with another mentorship video, and we're going to be taking a look at two stocks that you want me to take a look at. And in terms of timing, one of them is NHTC, the other one is NTRI, and trying to figure out where one can get an entry based on the charts. So let's begin by taking a look at the first one. As you can see here, NHTC on the monthly, this stock has been an amazing moving stock. Yes, I do agree that it is in the right sector. Everything is looking great. The problem here, as you can see on the monthly, we haven't had 1 month of rest. We need at least 1 month down on the monthly, as you know, before we can get an entry. So on the monthly, there is absolutely no breakout based on the 1 month rest minimum requirement. So on the monthly, this one you have to let go. If we go to the weekly, and before, let's go back to the monthly. Couple things here. If you go back to the chart, you can see that it did an ultimate Mwathe breakout sometime in middle of 2013. Stock was trading at about $2 or about under $2. Since then, you can see it's gone all the way to the 40s, and again there was another breakout past 61.8, so 69.1, excuse me, past 69.1. And we've had a couple rest periods. There was 1 month of rest here, and the stock broke out. So that was another entry, and this entry was a strong entry because the stock was already trading above 69.10. And then of course we have this most recent breakout here with the stock also pushing its monthly RSI above 69.1. And since then, of course, we see that the stock, having met the minimum requirement, has gone on a major run. Just a quick look here at the MACDs, so we can just, for the sake of crystallizing the ultimate Mwathe breakout, you can see that this is where the RSI went to 3-year highs, somewhere here. You can see that the MACDs were also making their own multi-year highs during the same period, and also the subsequent breakout here with the 1 month of rest. We see that again, even the RSI went to new highs. So the RSI here recorded new highs, and the MACDs also made new highs. We also see that during this breakout, which is the most recent monthly breakout there, so this entry, so this entry there in price also corresponds with this period, let me get that right, corresponds with this period here when the RSI is back above 69.10. MACDs are also breaking out during that period. So the minimum Mwathe breakout requirements were met, which might explain why the stock has been doing good. So let's go to your timing question. Take a look here, and again, ever since we got this breakout, you can use this breakout. You can either do it this way, or you can use this breakout here or here. And as the RSI was recapturing the level above 69.1 here, you can see this nice breakout. Since then, we haven't had 2 weeks of rest. This was 1 week of rest and a move back to new highs. Again, 1 week of rest and a move back to new highs. 1 week of rest here and a move back to new highs. So we haven't had the classic 2 weeks of rest. And so even from a weekly standpoint, the stock has not given you a reason to be getting back in that stock. Take a look here, just for the sake of observation, how the stock traded well as the RSI held above 69.1, which is during this phase here, taking the stock from under $2 all the way to about $20. And again, it has stayed above 69.1 on the weekly also over the last couple of months during this period here when it has gone on a major run. So even on the weekly, we don't see a reason to own that stock. Yes, you could have used the daily, but I think we are better off just staying with the weeklies and monthlies, because we are looking to hold on to these securities for weeks and months at a time if they continue doing well. But on the daily, we can see there was a breakout here after a couple of days of rest. There's another breakout here, after a couple days of rest, and there's another breakout here after a couple days of rest. And even here, as of the most recent day action, this is a legitimate breakout because it has had 2 days of rest. So from a timing standpoint, this is a legitimate breakout. RSI is trading above 69.1 on the daily. So from a breakout standpoint, it's okay. And also from a MACD standpoint, you can see that one of the MACDs at the very least is trading at near MACD highs. The problem here is, quite frankly, I would rather we stick with the weekly, because the weekly does give you a bigger picture that this extended hyperbolic move could be coming to an end at any point. And so you really be going into the stock, as you said, would be more like chasing. On the monthly, you can also see that really you need at least 1 month of rest to give this stock some rest and some renewed energy. For now, this is too extended. In my opinion, this one is one you just have to let go and wait for a potential breakout down the road. The other stock you mentioned is in the same group, which has been doing well, NTRI. Let's go to the monthly. You can see that the most recent monthly breakout was right here about 2 months ago. So that was that breakout past the previous monthly high. That also corresponded with the RSI moving here above 69.10. So 2 months ago, that was looking like a good buy situation. And we can also see that the MACD as of right now, the last couple of months, 2 months or so, even the MACDs have moved to fresh highs. So from a minimum ultimate the breakout standpoint, stock looks great, but we haven't seen 1 month of rest since the breakout. So it's a little bit extended because the ideal buy point was here at about $20. So you'd be chasing it here at 25 because of that timing issue. If we go to the weekly, we can see that on the weekly, the most recent breakout was about 4 weeks ago, during this breakout past this period when the stock had rested for about 4 weeks of rest, and then it broke out. So that was your most recent buy point. Is it too extended? Really not. Yes and no, because you want to get the stock as close to 5% from the most recent ideal entry, and that would be at about, so this is now, let's call the pivot here at about, of this buy point, 2350 thereabouts. And so if you take 5% of 2350, so 23, it's just an estimate here of this closing high, which is the most recent buy point, so times 1.05, and it comes to about 24.67. So is it extended? It really depends. It's not really that extended. If you can get it anywhere close to this 24.67 level, or 5% above 23.5, which is this weekly closing high, then you can say that it is still within reasonable buy point. So personally, it's really up to you. It's really, there's no hard rule. The one thing that I would be cautious is just because if we take a look at the daily for the markets, go back to the daily, because the market does influence where stocks are going. You can see on the Dow right now, we are looking at markets showing this topside resistance as we've been discussing. So really the environment is not clearly supporting stocks for now until we see the market bounce. And also we see that the S&P 500 for now is also looking to show resistance as we've been discussing on the top side of this line, most recently giving us a double top on the daily. So there's a reason for the market to be pulling back, and because of that, I think we should not be chasing any stocks. Most of these stocks, if the market is truly pulling back, can come back a little bit lower. So in my opinion, you're better off waiting for those 2 weeks of rest on the weekly, and at least make sure that you're not buying any stock at more than 5% from its purchase. That's how I would approach it, and especially given that the market could pull back, you don't want to be chasing. So in my opinion, for the 2 stocks you mentioned, one of them is clearly too extended. One is within reasonable range. Just make sure you don't buy it without waiting for a pullback. Eric Muadha, Muadha.com. As always, good luck, peace, and blessings. Woo! E-A-C-S.